Okay, this is the fantasy of every trader, that the market is going to get killed and they're going to be the only one that saw it coming and made money while everyone else lost all their money. Everyone has that fantasy from time to time. Some people can shake it, some people can't. Michael wrote about it. We're going to get into that in a minute. Stick around. All right, Mike, you contributed a piece to Inside ETFs, and you're speaking at Inside ETFs later on this winter, but you're basically saying that it's easier to be a bull in a bull market than a bear to be than for a bear in a bear market, and that the two things are very asymmetric. What did you mean by that?
Well, the reason why is because stocks act differently in a bull and a bear market. I mean, obviously, but there are huge bounces in bear markets that really test your conviction, even if you are directionally right, or even if you saw it coming because of valuations or whether you're using technicals or whatever you're using, that really test your.
We call those bear market rallies, and they're vicious. And they're fast.
They really test your conviction and almost make it impossible to stay bearish. Right. So, for instance, look at what just happened. We had a bear market, a 20% peak to trough decline in the S&P 500. And then we bounce 15% over the next 3 to 4 weeks.
Yeah. So from September to the end of December,
so let's
we drop 20%, and then really quickly recover 2/3 of that, like in a tenth of the time.
So let's say that stocks roll over again,
right,
and retest those lows and then go right through them. Were people that were bearish going from October to December, like, are they pressing their bets now? Did they take some off and then re-engage with some more shorts? Like, it's just very hard. Now, in a bull market, it's not easy to make money. I'm not saying easy money is ever made, but you don't get like the opposite of bear market rallies in bull markets.
You don't necessarily get a huge swift decline the way that you get a huge swift rally during a bear market.
Right, because in bear markets you have the everybody back in the pool type buying.
Yeah.
And that's hard to like.
You have short covering, like bursts of short covering.
Yeah. So to your point, there's nothing better than making money when everybody else is losing.
You just feel like the greatest.
Yeah. But it's not what most people should focus their time on.
Of course, because it's very hard to do. And even if you get the trend right, you have this amazing chart where you show the bear market of 2000 to 2002, which ultimately was a 51% decline for the S&P. But there were 20% rallies on the way down.
Right, there were 3 of them.
So even if you're betting against the market and you're right the whole way down, you have these setbacks that are very painful and very acute. Like they hit you out of nowhere, and you could stay short, or maybe you can't. But they're hard to deal with, even if you get it right.
So it's the thing like so let's say you nail the timing and you're short into like a 20% decline. Do you cover on the way down and then reload on the bounce? I mean, in theory, yes, but who the hell can do that?
How are you going to do that? And how do you know when the decline is ended? It's no easier.
Yeah.
So the reason why I think it's easier to be a bull in a bull market is because even when there are pullbacks in a bull market, you're just like, yeah, well, everyone lost a little bit of money this week. Right? Like, all right, big deal. It's down 10% from the high. Everyone's down a little from the high. So what? Like, that's easier to deal with than being right in a bear market, betting against it, and dealing with those bear market
imagine
rallies.
You're like, shit, I was right and I still lost money.
Right. So I talk to some of the greatest short sellers who ever lived, and not one of them would ever be like, yeah, being bearish in a bear market, no problem. Like, it's easy street. They're always just the same as you would if you were bullish in a bull market. They're always thinking about, when is this going to be the end? And did I overstay my welcome? And all the things that any investor would ask themselves. It's not any easier just because they're making money while everyone's losing, even though it feels great. You have this great Michael Steinhardt quote, the exact quote: "Nothing gives a better feeling to a money manager than making money for his or her client when almost everyone else is losing." Psychologically, why do you think that is? Is it like Schadenfreude?
Yeah, and it's just like, I am the greatest. Everybody else is losing money, but I'm making it.
Do you think there's also a little bit of like, you should have listened to me?
Oh, totally.
Like all these bubble guys that are out there, like, oh, I told you. If only you had read the same books that I read, you would have seen it coming also.
It's all of that.
There's so much of that. It's gross. All right, that's it. What do you guys think? Is it easier to be a bull in a bull market than it is to be a bear in a bear market? Leave us your comments. Subscribe to the channel. Let us know what you think. We love your feedback, and we'll talk to you soon.